Hey everybody, this is Dr. Tom Carr, aka Dr. Stoxx of drstoxx.com. That's drstoxx.com. And I'm going to do something a little unusual today because we're having a bit of a market fluctuation, shall we say. Market's been a little bit weaker, especially in some critical sectors of the economy than expected. And so I wanted to do something really quick with you since I promised to do this in both of my trading rooms. And if you want to join me in the live trading room or the live options room, go to drstoxx.com, click the subscribe menu, scroll down, and one for stocks and ETFs and micro e-minis, and the other one for options, mostly just long calls and puts. And if you want to combine both together, you can do that at a 40% discount. All right, I'm going to jump right over to finviz.com, and you can see these are the 10-minute charts of the four major indexes: the Dow, the Nasdaq, the S&P, and the Russell. And you can see that we're in a pretty serious trend down day. It is Thursday. The government has been shut down for about a week now. We really don't know what's going on in the overall economy because we've not had any jobs data, we've not had jobless claims, we've not had durable goods orders, and a number of other things that were supposed to come out. But because those are compiled by government agencies, there's no data, so we don't really know how the overall economy has been doing for about a week. And the market never likes to have uncertainty, so that's weighing a bit on the market. And what people are mostly selling out of today are blue chip tech stocks. That's the most concerning thing, right? Usually, you'd think if the market or the economy is weak, you get back into the blue chips. You get out of the growth stuff. But we're also seeing rate sensitive names get really hammered. So homies, small caps, um, anything related to metals, they've been doing so well. In fact, I've been saying, buy gold, buy silver for weeks now. And I finally got out of a gold position I was in this morning, but they've been really weak. And anything related to higher interest rates are not doing very well today. And that's kind of a head scratcher because the Fed has got its finger on the cut button, and we should be seeing lower rates by the time we get out to the end of the year. So I just need to figure out if it's a one day wonder, one day event, title a perfect storm of convergences that happen to lead to this weakness today, and then everything bounces back tomorrow. Or is this something maybe a little bit more of a prolonged pullback for the market? I don't know the answer to that just yet, so I'm going to do some digging around after I do this. But here's the thing: I promised my group, both my trading rooms, to put together a little bit of a primer on how to build basic stock scans in finviz.com. Now, you can also do this in any other market scanning tool. I normally use Market Surge, which is a product from Investors Business Daily. I'm a partner with them. It's, to me, the best, most robust scanning tool out there, but it's not quite as user-friendly, shall we say, as Finviz. And Finviz is a free tool, so anybody can use this one. So if you want to build a basic stock scan, and I'll show you kind of how to tweak this a little bit so that you can tailor it to your own particular interests in the market, go to the screening tab up here at the top, click on that, and it'll bring up the screening tool. This is the screening tool itself. I do have a bunch of screens that I've already programmed in to finviz.com, and I would recommend that when you find a screen that you like, that's producing good fruit, giving you stocks that you really would like to trade, go ahead and save that, and then just run that every few days, right? And build your watch list out from those candidates. So up here and under this set of tabs, we have the various kinds of screening filters that you have access to with Finviz. And if you hit the all button, you're going to get all the filters. We'll do that in just a minute. But I usually like to start with either the technical or the descriptive. Let's just start with descriptive first off, and we'll work on kind of building out the most basic scan possible, and then we'll add on some extra filters that might give you, the best stocks to trade in the market right now. So one of the couple of things that we want to add to our screening tool here from just the descriptive tools or filters. I have to get my dialogue straight here. First of all, average volume. So I like to go with at least 1 million shares per day on an average basis. We want only stocks. We want to trade only stocks that are very liquid. They're easy to get in and out of, and usually the stocks that are very actively traded are the best stocks in the market. They're generating the most interest from investors and retail traders and hedge funds. The stocks that are very thinly traded are usually thin for a reason, right? Nobody's really interested in them, and they're probably not going to be a very good investment anyway. So let's just leave those aside. Now, I start with 1 million, and sometimes I have to lower that number a little bit in order to get more candidates. But we'll just start right there. 1 million shares per day on average. This is going to give you all of your blue chips, pretty much all of your S&P 500 stocks, all of your NASDAQ 100 stocks. It's going to give you the popular meme stocks, the popular growth stocks, all the stocks that are fun to trade, right? They're all now coming through my scan. The second thing I go to over here is price. Now, this is going to be a unique thing to you as a trader. I prefer higher, higher price stocks. I rarely trade anything under $10 a share. Now, I have a couple of newsletters, my Hot Stocks letter, my Penny Stocks letter, which frequently trade stocks under $10 per share. The penny stocks always trade stocks under $2 a share. So it's not that I'm opposed to lower price stocks, but for my purposes, for my own comfort level, for my understanding of the dynamics of the market, I like the stocks that are at least above $20 a share. It's not a line in the sand. I will trade stocks that are lower, but it's usually where I start. So over 20, we put that up here. Okay, so now we only have 2 filters on our scan, and of the 10,000 some odd stocks that are in the Finviz database, we've got it knocked down to 1,336. Okay, so we've already knocked out about 80% of all the stocks that are available for trading. Now I'm going to do something a little bit differently here. I'm going to go to the technical tab, and I'm going to search for this 50-day simple moving average. Go to the drop-down menu here, and what I'm looking for is the filter that requires every stock that passes through the scan to have their 50-day moving average above the 200-day moving average. So 200-day moving average, that's roughly a year of trading. That's your long-term view. 50-day moving average is roughly 1/4 of trading. And so what we're saying is that the stock has to be stronger in the last quarter than it has been over the past year, right? That's just telling us that these stocks are usually in an uptrend. They're showing good relative strength. They're the leading stocks in the market relative to those that are, maybe even below the 200 period moving average, or the 50 is falling and crashed through the 200. We want stocks that are in what is called what is it? The golden cross. It's got a golden cross. The 50 is above the 200 because somewhere in the past it crossed from underneath to above, and that's called a golden cross. The other one is a death cross. We don't want stocks with a death cross, right? So 50, we don't want it just crossing today. We want stocks that where the 50 is already above the 200, not just today. So where will we find that? Let's scroll down a little bit here. Here we go. The 50 is above the SMA 200. Click on that. All right, now we filtered down to 954. So we have to do a little bit more work. That's way too many stocks still for us to worry about. So on this same page, under technical, I'm going to do one more filter. I'm going to go to beta. What is beta? Well, beta is the measurement of how volatile a stock is relative to the S&P 500. Let's say the S&P 500 on average goes up or down 0.4% per day, something like that. That's probably pretty close to what it is. And the S&P 500, of course, is a big group of 500 stocks. It doesn't trade like a single stock. It trades like a big group of stocks, and so it's a little more sluggish, right, compared to most individual stocks. So if a stock trades at 1.5 beta, it is 50% more volatile than the S&P. Well, so if the S&P goes up 0.4% per day, a stock that has a 1.5 beta is at least 0.6% up or down per day, right? 50% greater than the S&P. So that's a pretty good figure to start with, 1.5. We want it over 1.5. So if we put that on there, we're down to 208 stocks. That's a pretty good, right? That's a good start. That's a good start. We're not done yet, but that's a good start. Now let's expand out. We're going to go to the all tab, and I'm sorry, maybe we don't even need to do that. Let's go back to the fundamental tab just to keep things a little simpler. And I'm going to put on a couple of fundamental filters that I know from past experience and from research are positively correlated to forward price movement over time, particularly near-term price movement, right? So you're going to have some fundamental filters here that don't really impact the movement of price all that much, but there are some that when these if filters are in place, you're looking at stocks that are much more likely than average to do really well over the near term. What is the near term? Well, maybe a 1 month to 3 months, something like that. All right. One of the things we can put on there, we're not going to put on any valuation filters because that will, there's nothing wrong with looking for stocks that have low value, but they do tend to be pretty sluggish relatively to the rest of the market. And the kind of market that value plays really come into their own is a pretty rare thing. And right now, we're not in one of those markets. We're in a rip-roaring bull market. Today's a little bit of an exception, but for most part, the best stocks that are out there trading aren't the value plays. They're the big growth names. And so we want to focus on growth, right? Okay, so one of the things we want to do, we're looking for not year-over-year growth. We're looking for quarter-over-quarter growth. Near-term growth signals near-term price movement, and we want something that's positively correlated, right? Okay, so let's do this. EPS growth quarter over quarter. We want this to be positive, but we don't want it just to be positive, right? We don't want something that contracted its EPS over the last quarter. We want something that actually grew EPS. But I'm going to put this at, let's start with over 15%. And let's see where that puts us. 15% is a pretty good number. 25% quarter on quarter is considered to be the kind of the minimum threshold for really, really good growth. When you see a company that keeps upping their EPS 25% at least quarter after quarter after quarter, they're doing something right. And that's fine, but we still have to allow for a lot of other stocks to come through. So we're going to start with 15%. That gets us down to 99. I'm going to add a second growth filter on here, and then let's see where that puts us. So now we want to do sales, right? We did EPS. That's the bottom line of a balance sheet. We want to do the top line now, the revenues coming in. Sales growth quarter over quarter. We're going to do, again, over 15%. And where does that put us? Okay, now that puts us down to 58. My rule of thumb is that if it doesn't give you 40 hits, your filters are a little too tight. If it's over 50, your filters are a little too loose. So let's see if we can get it down to somewhere under 50, right? And then we can, then we have a reasonable group of stocks to begin doing our due diligence on. Now, let me go back to all, and you can see that the filters I have on are highlighted in blue here. I've got 1, 2, 3, 4, 5, 6 different filters, and I'm not going to add any more. I'm just going to tighten up the ones that I have so that fewer stocks come through. Now, let's go back to those growth filters, right? Growth, EPS growth quarter over quarter, sales growth quarter over quarter. Any guesses as to which one of those is more important to forward price movement as a correlation, right? Which one, if I increased it a little bit, is more likely to give me stocks that are likely to go higher over the near term? Is it EPS or is it revenues? If you guessed revenues or sales, you guessed right. And here's why. So the EPS figure is something that companies can fudge pretty easily, right? You can fire a bunch of your workers and your EPS will go up because there's less overhead cost. You can spin off some of your company and all of a sudden you've got a whole bunch of money coming in. You can refinance your debt. You're not doing anything necessarily to make your product a better product, but you're increasing EPS. That's not true with sales. The only way to increase your sales quarter after quarter is to make a better product or bring out a new product line or, do something with your prices that makes your product more attractive. So if you're not growing sales, you don't have a good company. So let's do that. Let's go from sales from over 15 to over 20. And that leaves perfect. All right, now we're in business. 48 stocks. Okay, so there are a couple of ways you can just take a quick eyeball look at this list. And one of the ways is you can go to basic. And if you click on basic, you're going to get all the stocks, all 48 of them in alphabetical order. You're going to get a nice technical price chart on the left. You're going to get some of the basic valuation and fundamental growth and technical strength on the right hand side. And it's just a pretty good way. Just as a rule of thumb, okay, just as a big rule of thumb, right? Two big thumbs. On the left in the chart, you want to see a sequence of higher lows. That means the chart is in a nice looking uptrend. And actually, I like this chart of AAOI. You can see a sequence of higher lows all the way up. The highs have been kind of banging up against resistance, but right now it looks like there was a fresh breakout a few days ago on a big green stick and a bit of a bull flag forming after that, and that's that's bullish. And then on the right-hand side, you want to see more green numbers than red numbers, just as a general rule of thumb, right? Green numbers means something's really good going on in the company, lots of good growth. And red numbers typically mean either negative growth, you don't see that too often, but you do, or really bad valuations, right? Just overly valued and not a safe bet. So, for example, AAOI has a lot of good greens. It does have a few reds in there, but actually, here's the thing. Beware of this one right here, short float. You kind of want a red number right there. That means that 21% of the available shares for people to buy from the market are being held by short sellers. Those guys, if the stock keeps going up, those are the guys that have to cover really quickly because otherwise they're in a bad position. So if you have a heavy short float, anything over 12% or so is considered, in my mind, to be pretty heavy. You've got a stock that once it starts getting up above resistance can really squeeze. And what does that mean? That means it goes fast up. So I like AAOI for both reasons. The sequence of higher lows, fresh breakout, bull flag forming, some good growth over here in the right-hand column, heavy short float, which is a positive in my mind. And so I like AAOI. If we look down here at AFRM, it's a little different story. Now the growth numbers are amazing. They're very, very good. But we have a broken sequence of lows down here. Higher lows all along. That's great. All good stuff. All good stuff. Then it hit maybe all-time highs. I'm not sure. And it just got broken right through. And we're now below the 200 period moving average. And we're forming a little bit of a bear flag here. And it's not a good look at all. Plus, you've got some really expensive valuations over here. So if I had to choose between AAOI and AFRM, I would choose AAOI. All right, guys, I'm running out of time. I want to do something real quick. And that is I want to go to Trading View, and I've got an updated list of greens here. And what does that mean? Well, it means these are stocks that are either ready to buy right now. There are a few of them, or are setting up and potentially will give us a buy signal in the next couple of days. I update this list almost every day that I'm trading. Typically, stocks will go on the list and fall off several times in a matter of a month or so, as the dynamics of the market changes over time. But let me show you a few that I do kind of like. Some of these, in fact, were already in either the live trading room or the live options room. So I'll kind of look over those for now. But let's take a look. I've sorted these worst to best today. So ACHR is down 2.5% today. It's not ready to go just yet, but it did have a fresh breakout a few days ago. It has printed 3 bars down. It is printing what we would call a bull flag off of that breakout move. You can see the volume also is really, really good. You need 5 bars to make a bull flag, minimal 5 bars. Sometimes they go a little bit longer than that, but 5 is the minimum. So we need 2 more days, really. And what we want to see here is for trading to stay pretty much within the range of I don't know, maybe the open of Tuesday and let's say the low of today. If we can kind of see the a couple more days in that little range right there, then it should be a buy signal. If it starts getting down below that, and especially if it takes out the low of that range right there, yesterday's low, it's a no-go zone. We take it off the list. And Tesla, I think, is very close to another leg higher. It got this nice breakout move. We're up near all-time highs, not quite there yet. Had a big gap and crap on some good news that came out in deliveries. It had an investor day a couple of days ago. It was kind of a meh event, but it was not a negative anyway. And here today, the market's been pretty weak and is putting a bullish inside day bar above the rising 21 period moving average. The MAs are stacked, right? 21 above the 50, 50 above the 200. Both the 50 and 21 are rising, and prices above the 21. All of that is in perfect place. I just happen to think that with the market being a little bit squirrely today, maybe tomorrow as well, it may be that next week is a better time to buy some Tesla. And here's what you can do, by the way. If you think like Tesla is not a buy today, but it looks like maybe it needs another week or so, what you can do is you can sell some just out of the money puts. You get some premium from them, and then you can use that premium to buy even more shares than you would have normally bought when it is ready to go, or to get put into shares at the strike price of those puts, but you're at a discount because of the premium. That's one of the things I like to do. If I'm looking at a stock on my buy list that is not quite ready to go, I'll take a look at the put premium, try to sell about 1 week out, just a little bit below current price, and that usually works pretty well. Doesn't always work. You can get into some trouble selling puts, but just be aware of the risks. LASR is one of my favorite stocks for long-term investment. It is it's a Lido Tech play, and it is the only pure play in that space. And it's got a monopoly, and it's got all kinds of amazing contracts. So you can see it's an amazing growth play, right? So it was down here around 7. Now it's up at 30 just a few months later, and it's consolidating that move. You can see a double top there, but instead of crashing through the lows, it's holding well above that big earnings gap. That's called a power gap, and very bullish when you see that kind of thing. And it's trading inside of this nice range. It's staying above the 21 period moving average. I wouldn't say it's a buy today because the volume is really tepid, and yesterday's bullish reversal bar on the inside of the big range previous day did not see follow through, at least not yet, not today. So we kind of want to see some follow through on that green bar, which would mean like a close above that bar. We're not quite there yet, but I would say you could start a position here and add if it does trigger. GE, it looks a little bit toppy here, but it is staying above the rising 21. It's a nice uptrend. It's certainly a hold if you're already long. It's probably close to a buy as well. Carvana was looking pretty scary earlier today as a big flush out, but that when you get a big flush out like that in an uptrending stock, it shakes out everybody that was wanting to take profits, or new longs that just bought yesterday and now they're underwater, so they panic and they get out. And then it rises back up again. It takes out all the stops and then rises back up again. Now we're back up. We're above the trend line. We're in the pink zone. Now we're under the 50 and the 21, so it's got some resistance above it to get through. But it does look to me like it's printing a potential bullish reversal off of a 6-7 day pullback. That looks good. AMSC, very strong fundamentally, often on the IBD leaderboard in the IBD top 50. It's a superconductor, but this is more about data centers and supplying stuff to data centers. And it's a very good AI kind of play. So I like this little pullback. We're above the 21. Nice sequence of higher lows. Big green stick yesterday. Not quite following through today, but it is staying in the top of that green stick, and this looks ready to go. I would say go ahead and buy this right now if I might do it myself. So crowd. I have a little bit of crowd myself using the 2X version of the ETF. We were in some calls in the options room and got stopped out 2 days ago. And then it was, man, just such a beautiful day. But that happens, right? You hit a stop on a big flush out, and you got to get out because you never know if it's just going to keep going down. And then it's always frustrating to see it get back up again. But the only way to deal with that is either to keep your stops really wide, in which case you want to have your size really small, because if you have to take a really big stop out, you don't want it to be too painful. Or if you're like me, if you're able to watch the market throughout the day and you pretty have pretty good handle on price movement, you don't have to use a stop, but you need to watch it so that it doesn't get too carried away. And you track things like volume. As the volume is going down on that flush out, if it's getting lighter and lighter, you know that it's not really a big deal. And then when it starts rising back up again, the volume's getting heavier and heavier, and you think, okay, now I can hold it, I'm good. So there are those kinds of things that can keep you in the position, but for the most part, you're much better off obeying your stops, getting out, and then if you want to get back in again, you're just in a safer place. You're in a much safer place up here at 507 than you were down here at 475. I know that seems a little counterintuitive, but it's true. Okay, PTRN is an IPO that I like, and if you look at the 1 hour chart, I'm almost done here, guys. I need to get back into the room. If you look at the 1 hour chart, the recent uptrend has a fib retrace that hit yesterday or earlier today, I guess, and it's bouncing quite nicely off of that. So keep an eye on that one for a short-term trade. We are long a GEV using the 2X version. It's printing a nice continuation inverted head and shoulders, getting close to breaking out. It's a little bit early to get in here, but I liked that reversal bar and this big follow through on good volume that took place this week. I'm long CELC, which I announced in the live trading room. It's just a little bit of a experimental play for me, but I like the fundamentals and I really like this chart. Power gap, down into the pink zone. We're consolidating. We're not falling with the market. And volume was heavy down here when it flushed out. And now it's right back up and ready, almost ready to break out. CoreWeave has been an interesting hold. It's been up, down, up, down, up, down. But look at this nice looking bullish inverted head and shoulders banging up on the neckline. We're long CoreWeave in one of the rooms. I'm forgetting which one. Amazon looks a lot better today, and unfortunately, that day right there stopped us out, and it's been all upside from there, and that happens. But we are long Facebook, and it's having a very nice day today despite the market. Keep an eye on MP. It is a materials play, rare earth mining play, and it is printing a nice-looking inverted head and shoulders continuation pattern in a nice-looking uptrend. It hasn't been able to get above that neckline and stay there, and so it's not a buy. And today's heavy volume, because it's another flush out, got up there and came slamming back down again, might mean that it's not going to break out and is not going to move the way we want it to. And Oracle, we are long Oracle in the live trading room using the 2X ETF version. And I'm not sure if it's going to do a third little rounded bottom lower here. That's the danger of this current kind of getting in early. But it's been above the 200. Here's your flush out. The fact that it raised back up to almost the 21 and then gapped up the next day and held the gap and then followed through today, all of that is bullish, bullish, and bullish in a market today, especially that's been pretty weak. So that's good. In fact, it's the strongest one on my watch list. All right, guys, I'm going to let you go. I'll produce this. I'll put a link in both rooms. And we'll get back to trading the last hour and 20 minutes or so together. God bless everybody. See you back in the rooms in just a little bit. Bye for now.